basically, in the meantime, while she's doing that, the reason I designed this concept of Evoke is immersive technology company. We have more than 300 people working for us in India and Philippines and globally, and uh, they're all able to, yeah, we'll take some questions in a second. Anything Elevate is a resource. So Evoke is supporting 40 plus of our companies that I'm invested in. And basically, it has an immersive technology platform where Elevate is one of its main pillars. And Elevate has over 25 chapters globally now. We're already having up to 50 ambassadors now and growing. So each ambassador is going to run a city, or within the city, there'll be multiple also. And they will run a chapter where people will come and join as members, and they'll get the benefits of the memberships, from CRM systems to online community to live event to AI tools, everything that you need to do business, including you get gratitude tokens to join. So that's the main purpose of me, us designing this concept where people can come in and join us and make a difference in the world. But yeah, somebody had a question. Kathy, are you ready, or you want me to take a question?
Well, it's not working. I can't make it.
You want to send it over to me? I can try and play it. You can email it to me or WhatsApp it to me, and I'll open it up.
Um,
Unless you want, would it just go slide by slide, maybe?
yeah, I can just do it this way. It's fine.
Yeah, that's fine. This is
Yeah,
fine.
just go slide by slide. Just walk us
Yeah.
through it as you scroll down.
Yeah.
Yeah. So we're going to be talking about the power of leverage and building wealth on your terms. So this is all about just breaking free from the limits of traditional finance and just taking full control of your money and building your own banking system and unlocking true potential of your wealth. You're going to empower yourself to grow, invest, and thrive on your terms. So if you're new in business, chances are, finances are probably tough, so it takes a while to build a business. So if you create a financial foundation, you have a much better chance of the business surviving and thriving with that foundation. So I can't do it. I can't do anything with it.
You won't even move forward. You will not move forward to the next
No,
one.
Yeah, you can't click on the next slide on the left-hand side in the column. You should just be able to click there,
no, it
and it should
just
go to that slide. Oh,
doesn't.
they close it and reopen it. Close it and reopen it. If you have to, close your machine and reopen it and start over.
Yeah, I no, I think what needs to happen, you're right. I think just X out of there, yeah, and shut down that program and just restart it, the PowerPoint.
It doesn't even let me shut it down.
It kind of froze on you.
Yeah, I don't know what's going on.
You're on Mac, Command Tab Quit. So Command, then you tab over to that application, and then Command Quit Q, and it'll close it. If you're in Windows, it's
Do what? Command
Control Alt
Q?
C, I think, or are you on a Mac, Macintosh or Windows?
I'm on
An
Windows.
Apple or Windows?
I think it might work now. Let's
Okay,
see.
Windows. I think it's Control Alt C. Oh, somebody else can help me with that. But you need to go into Open Program. I think it's in Control Panel on your right hand, at the very bottom. You go into Control Settings, and then you should be able to see your open applications, and then you force quit that application.
I think she's back up.
So there's generally three types of people in the world. Most people are either debtors or savers. So people don't necessarily have a lot of money saved up because, as soon as money comes in, it goes out. We have a hard time getting ahead. So we have to finance everything. So we finance something and then we pay it off and then we get back to zero. We finance something again, pay it off. So we're not getting anywhere. We're just staying at zero. The saver, on the other hand, will save because they don't want to pay interest to anybody. So they're going to save up their money to pay cash. But then, once they pay cash, then they're back to zero again. So then they have to save up for something else, pay cash, and they're back to zero. So whether you're a debtor or a saver, you're just not getting anywhere. Because the thing is, we pay interest, even whether we save, whether we pay cash or we finance it, we're still paying interest, because when we pay cash, we're giving up the interest that that money would have otherwise earned for us. So with the maximizer that we want to talk about, it's a way to grow your wealth, uninterrupted compounding, and leverage it so you can still buy all the things that you want to buy. This isn't about limiting your financial life. It's not about budgeting. It's just about a way to save your money and then leverage that money without interrupting the growth. So the money dilemma is that 40% of our money is going to taxes. It's not just income taxes, but there's sales tax, property tax, so many different taxes. And then there's interest cost. Americans are spending an average of 34.5 cents of every single dollar just on interest alone. And then people might say, well, I don't pay interest because I pay cash for anything. But again, we're still paying interest when we pay cash because we're giving up that interest. So there's actually 5 different areas where people are leaking money unknowingly and unnecessarily. How they're paying for their mortgage, how they pay for their taxes, retirement, kids' college, and major purchases. So mortgage, like, people tend to think, it's the American dream to have that mortgage paid off. But in reality, when you put money in your house, that money is just sitting there in the walls of your house doing nothing for you. So it might not be the best strategy to pay it off, because we always want the dollars working for us. And then people think, well, to have a 15-year mortgage instead of a 30-year mortgage might be better because you're going to save on interest, which is totally true if you have that mortgage for the entire period. The problem is most people are moving or refinancing every 5 to 7 years. So we reset that amortization schedule. And with amortization, most of the interest is charged up front. So people think, they have a 3% mortgage right now, they're really happy because it's practically free money. But in reality, if you look at the mortgage statement, it's actually at least 80% of the payment is interest alone in the first few years. And then taxes, people think, some people like to get a real nice tax refund at the end of the year, but then when they do that, they're giving the government a free loan, basically. So that money is not working for them. So they're leaking that opportunity cost of those dollars. And then a lot of people are saving in qualified plans for retirement, like a 401k or an IRA. They want that tax write-off now. They want to be set for the future. But when we stuff our money away like that, we're doing it at an unknown tax rate for the future. Yeah, we get the benefit now, but we have no idea what the taxes are going to be in the future. So would you rather pay taxes on this seed now, or would you rather pay taxes on an unknown tax rate in the future on the entire harvest? And then people are saving for kids' college in different ways. Like, there's a 529 plan that a lot of people use because they get the tax write-off for that, and then they can use that for college and not pay taxes on that money. But then the problem is it's generally a mutual fund, so that's subject to the volatility of the stock market. And plus, if the kid doesn't want to go to college, if they decide they want to be an entrepreneur instead, then they lose all the tax advantages. And then how we pay for major purchases. Like I said, whether we finance or we pay cash, we're paying interest. So a lot of people pay cash for their cars because they don't want to pay the interest, but then they're giving up what that money would have otherwise earned for them. So let's talk about how the bank works. So we're taught that, the bank is the place to store your money. But, like I said earlier, say we put $100,000 deposit into the bank. Maybe we're really lucky and the bank is paying us 4%. So then the bank takes our money and they'll loan it out maybe for a home mortgage at 7%. And then the seller's going to put that money back in the bank, and the bank's going to take those same dollars and loan it out for a car at, say, 8%. And then the car dealership's putting that right back into the bank. And then the bank will loan it out maybe for a home remodel. Then the contractor puts those dollars right back into the bank, and then they loan the same dollars out again for maybe a debt consolidation loan. And then that money gets put right back into the bank. So we earn 4, and the bank is earning a spread on all of these transactions. So they earn a spread of 3 on the house, a spread of 4 on the car, a spread of 5 on the home remodel, and a spread of 8 on the debt consolidation. So we earn 4 and the bank earned 20. So how much more did the bank earn than we did?
16.
Yep. That's what most people would say. But in reality, 20 is 500% more than 4. So they're actually making 500% more than we are in our money that we leave there. So the bank isn't taking any risk because they're using our money and they're making all of this money. So we can just wipe out the bank, take the place of the bank ourselves, and we can be making all that extra money for ourselves instead of giving it away. It just takes some discipline to save for the first car, and then you're good. So this man, Nelson Nash, wrote this book, Becoming Your Own Banker, that completely changed my life. It's all about taking control of the banking function. And like I said, it can be done with any tool. Just build your own pool of capital instead of leaving your money in the bank, make it work for you. But the best place is a dividend paying whole life insurance policy with a mutual company. A mutual company because the policy owners are the owners of the company. So we benefit from how great the company is doing. So whereas a stock company, they have to take care of the stockholders. So with this policy, you have guaranteed growth. It doesn't matter what happens to the stock market. It doesn't matter what happens to the economy. These policies are guaranteed to grow every single year, no matter what. And then it's fully liquid, so you can access that principal anytime for any reason, tax-free, without interrupting the compounding growth. So if you're going to be using it for business expenses, you can go ahead and take a loan out, put it into your business to make your business grow, and the money's going to grow in the policy at the same time. And then, like I said, it's protected from loss. You don't have the market volatility. And then there's liquidity. You can access it whenever you need it. So when the policy is first issued, it takes about up to 30 days to get the first loan. Traditionally, it takes about 10 years before you can borrow anything from a policy. But since these policies are specially designed for high cash value, within 30 days, you get that first loan. And then after that, it only takes about 3 to 5 days to access the money. And you don't have to do any credit checks, no employment history or anything. You just tell the insurance company you need the money. As long as the cash value is available, they'll send you a check or deposit the money directly into your bank account. And then you're the bank now. So you get to make all the rules. So you get to create your own payment schedule. There's no requirements to repay the loan if you don't want to. The insurance company doesn't care because they know they're going to get their money eventually because they'll just take it from the death benefit when you graduate from this earth. So they'll just deduct the loan balance from the death benefit and the balance will go to your family. But ideally, you're going to play honest banker with yourself, create a payment schedule for yourself, pay it back. But whenever you pay back the loan, it's not like a payment because you're just replenishing your available cash value. It's just like a line of credit. So then you can use it. You can use it again. So it's kind of similar to a home equity line of credit. So you're going to build equity in the policy. Every time you make a payment or earn a dividend, that equity is going to increase. And then you get to borrow against it. When you have a home equity line, and to get a home equity line of credit, you have to qualify for the loan. Even though it's your money in that house, you still have to qualify to get it out. But with this, it works exactly the same way as the equity loan, but you don't have to qualify for it because the money's there available for you to use anytime. And then it's the power of uninterrupted compounding. Like, would you rather have a penny today doubled every single day or $1 million today? A lot of people would say they'd rather have $1 million today because a penny is not going to grow to much. But in reality, in 30 days, if that penny were to double every single day, that penny would turn into $5 million. So that's the power of uninterrupted compounding, which is happening in these policies. So you're going to access the funds without stopping the growth. The cash value is going to continue compounding. You're going to repay on your terms, and then you just repeat the cycle. You just keep, instead of just putting your money in the bank and making the payments to whatever you make, you just add one extra step. You put the money in the policy first, and then you leverage the policy for whatever it is you need in your financial life. Maybe not just everyday bill payments, but everything else you can use the policy for. So let me show you an example of how it works, just to use the policy for buying your cars. So this is an example of somebody paying themselves first $10,000 a year into a policy. And in this example, they're only paying for 7 years. So you can see that even though it's a whole life policy, you're not required to pay for your whole life. I wouldn't recommend ever stopping because the more money you put in, the more it's going to benefit you, but just so you know, you can stop after 7 years. So in this example, they decide to save up for 3 years so they can buy a car for $25,000 in year three. Now, if you see in year one, they have over $5,000 available in cash value. So they could have taken a loan right away, but they wanted to wait till they had enough for the car. So you're going to be buying that car anyways. So whether you finance it or pay cash, remember you're still paying interest. But this way, you're going to pay the interest back to yourself. So you're making the payments back into the policy of $500 a month for those 5 years. So then you put in a total of $70,000 in premium after 7 years. You paid $30,000 in the repayments to the loan for a total injection of $100,000. Then you borrow $25,000 for the car for a total net injection of $75,000. So after that 7 years, you have $67,000 of cash value available still. Plus you have the car. So now you've recaptured 91 cents of every single dollar on that car. Where the traditional way, you've paid $25,000 for the car, whether you finance or pay cash, that money is gone forever. So then in year eight, because most Americans are buying cars every 4 to 5 years, they go ahead and take another loan for another car. They no longer are making any premium payments in this case. So all they do is pay that six. So sorry. So they pay the $500 a month back to themselves. It's actually back to the insurance company, but it's replenishing their cash value every time they make a payment. So at the end of year 12, they've paid $30,000 only for the car, no premium payments. So they borrowed $25,000 for the car for a total injection into the policy of $5,000. But their cash value grew by $23,000 during that time. So now, year 12, they have a cash value available to use of $91,000. Plus, they have the two cars. So it's just a much more efficient way to use your money instead of just giving it away when you buy something. Just keep all the money in your family. And this is an example of a business owner who pays $100,000 a year in taxes. So instead of just paying the tax bill directly and having that money gone forever, never to work for you again, you can actually put it through a life insurance policy. So in this example, they paid $20,000 for the base premium. So that's like just saving for the future $20,000. So they're paying $100,000 in taxes. They're probably making at least $500,000. So 20,000, that's only like, less like 4% of their income that they're saving. So they pay that for the future, and they also put $100,000 for the taxes into the policy, and then they turn around and borrow against the policy to pay the taxes. So then all that money is earning uninterrupted compounding tax-free growth. It's tax deferred, but they're accessing tax-free loans. So
So,
now instead of, go ahead.
no, go ahead. I had a question, but I can wait. Go ahead. You can explain it.
Okay. So now instead of that money just being gone, it's turning into a $2.4 million death benefit for their family. And they still have a little bit of cash value available. So in this example, they're showing this is an increasing loan balance. So it's not paying back the loans at all. But when you're in business, you're going to have ideally a cash that you have to store somewhere. So then you can just pay back the loan, store that money in the policy, and when you need it, then you can just borrow it again, use it again.
So, Kathy, can I ask you a quick question? You're saying
Mm-hmm.
instead of paying the IRS first, open up the policy instead of 100K, put 120K into the policy first, right?
Right.
And
Mm-hmm.
then you borrow 86,000 against it to pay
Right.
the IRS, right?
Right. Yeah,
You
you
lose
can, in
about
this
20,
example, you can't borrow the whole hundred because,
right? We're just understanding what we're doing. So
uh
24,000 is from here that's still in the policy, correct?
hmm
And then the outstanding loan balance is 91,000. How? At the end of the year?
Yeah, with interest.
With interest, right?
Hmm
What's the net premium outlay? What does that mean? What does this
That's
mean?
that's how much you've paid out of pocket.
Out of pocket. Okay.
So, So you
And
could
then
only borrow 86,000, so you had to put in an extra 14,000 for the taxes that year.
gotcha. Okay, cool. Now, how did it, the death benefit is 2.4, which is understandable because it's a policy, but
Hmm.
how does it increasingly go down to become the net cash value is 29,000 in the year 10,
Hmm.
right? Am I correct? And the death this increases. So now you get benefit of the cash value here.
Yep.
So
You
you
can
recoup
still use
all
that
your,
cash value. You can borrow against that cash value.
wow, okay, cool. Mm,
Yeah.
thank you.
But ideally, you would be, putting your money, storing your money into the policy, to pay off the loan. So that way you decrease the interest costs and that money is still available to you, within 3 days.
And during the year, you can also pay down and bring back, like you can put money back and bring, yeah, like a checking account probably.
Yep, you can put in money anytime. You can either like create like an amortization schedule for yourself, make set payments back, or whenever you like make a good sale or you have some kind of a windfall, you can just put a lump sum in. So it's completely flexible. You get to manage it however you want to since you are your own banker.
Awesome. Thank you. Sorry, I didn't mean to interrupt, but just wanted to fully.
Okay.
Oh,
And so the tax advantages of infinite banking using whole life insurance is tax deferred growth. So the cash value is going to grow without immediate taxation. And then as long as you're accessing it through tax-free loans, it's never going to be taxed. And the death benefit is transferred tax-free to your beneficiaries. And then if you do the Rockefeller method, you can have the trust as a beneficiary. That way, you're not just like some people are afraid of giving their kids a bunch of money, and they're just going to blow it. So, but if you keep the money in the trust, and it builds up the trust bigger and bigger for multiple generations, so the money lasts. Like the Rockefellers, there's still millionaires after generations and generations, whereas the Vanderbilts were super rich, but then all the money was squandered within the third generation. So, and the death benefit is increasing because every time you make a payment or earn a dividend, pay it increases the death benefit because all the premiums going towards the death benefit. When the death benefit increases, the cash value increases because the cash value is the death benefit, the portion of the death benefit that the insurance company allows you to use while you're living. Like some people say, well, it's not right because if you die, then the heirs only get the death benefit; they don't get the cash value. So people think it's a scam, but the cash value is a portion of the death benefit, and you know the death benefit's going to be much higher than the cash value, anyways, unless you live to 121, at which time it's contractually guaranteed for the cash value to equal the death benefit. So the
okay.
long-term advantage, the longer you live, the bigger the payout because since the death benefit keeps getting bigger. And it's loss proof. Like it's guaranteed to increase no matter what happens. Once the dividend it's declared, like it's going to grow with guaranteed interest, and then there's dividends on top of that based on the performance of the insurance company. The dividends are not guaranteed, but they've been paid every single year for over 100 years with these companies that we use. So chances are they're going to continue paying the dividends also. And there's creditor protection. The cash value is shielded from lawsuits in most states. And it's death proof because the beneficiary is going to receive multiple times your investment. So it's the only thing that's guaranteed. The only type of insurance that's guaranteed to pay out is life insurance, like your car insurance, home insurance. If something doesn't happen, it's not guaranteed to pay out, but this is guaranteed. And then you can overcome insurance barriers because some people will be like, well, this sounds great, but I'm already in my 60s or I'm not healthy. I just had a heart attack a couple of years ago. But even if you have something going on that you are uninsurable, then you can actually insure somebody else that you have an insurable interest in. This could be a spouse, a child, even a business partner. And there's flexibility. So you can create your banking system despite your health issues. And even if you're like in your 60s, people think they're too old, insurance is going to be too high. But really, the only difference is really going to be in the death benefit. The older you are, the more expensive the insurance is. So it's just going to buy a smaller death benefit. There's not going to be that much of a difference in the cash value if you're older. So
Right. You can
It's
have a
a
lesser of a, sorry, you can have a lesser of a death benefit versus, higher. Yeah. Yeah.
right, yeah, but it's still going to work as a banking system even in your 60s.
Gotcha.
So this is a very it's a great way um, to if you have a business partner, if you have insurance policies on each other, then that will help ensure that there's continuity of the business. You won't have to worry about, the spouse now being a business partner. You can have that policy to pay off the spouse.
It's very
And,
interesting too. Hmm.
yeah. And you can also have policies on your employees. So you can actually dual purpose the dollars. So like you can put money in the policy first and borrow against the policy for your payroll or for to pay for the benefits or whatever it is. So you're growing more cash for the business to make it more stable. And then you can also use it as like golden handcuffs. So you can say like, well, if you stay with me for X amount of years, then I'll let you keep this policy when you leave. And then you can even allow them to borrow against it while they're working with you. So, if they have less stress, less money problems, they're going to perform better at work if they know that they have access to this place where they can borrow at a decent interest rate so they can pay you back instead of borrowing from the bank. So the money can stay in the business instead of going out to
Awesome. Hey,
bank.
I have in the lieu of time, should we take a couple of questions maybe and then we
Yeah.
talk a little bit more about Elevate and that that would be because with the session is also about how to grow your business.
Yep.
Um, I want to just give time for that too. So if you want to,
There's just a couple more slides. These are just some examples of famous people who have used policies. Walt Disney wouldn't have had Disney if it wasn't for his life insurance policy. And this is billions of dollars of life insurance, and the banks know that this is the best place to keep their money. So the banks are the ones making all their money, so they probably know what they're doing. And so it's your money, your choice. Traditional banking lets others profit from your money, or with infinite banking, you reap all the rewards from your own banking system.
awesome. Awesome. Thank you, Kathy. Thank you so much. You learned so much, from someone like you, and you're a great leader. You've been successful. You've helped so many people. I can't wait to have you onboarded fully and can't wait to launch the mastermind. We already have dates now almost. We're ready to do that. Yeah. So super
Mhm.
excited for the next steps. Guys, for those who are, late, came in late or Kathy joined us recently in Temecula, and she's going to run the chapter in Temecula. Now we're almost over 50 ambassadors. Like I'm so stoked, and I can't wait for this thing to grow bigger and bigger because our goal is to, as you saw the video and the token that's involved in gratitude token, which is we want to circulate that more and more. So it's not like you can't buy it on any decentralized exchange or you can't buy it on any other platform. It's only captive or it's only native to us, to our marketplace, which is Evoke Marketplace, the one that we are launching pretty soon. So the token is going to be, used as a, reward system. And every time you use the token, somebody will be served, some charity will be helped across the globe, and you'll be making a difference in somebody's life. So Ambassador has such a key role in this because they run the chapters and they distribute the tokens to everyone that joins the membership. And the membership allows you to get really good perks and gets benefits and physical product that you can buy through the tokens. So it's a really good system that will help everybody to really, understand that how while making money and doing everyday things, we can still help others who are absolutely in dire stress. Like how it's unbelievable how this world is lopsided. I mean, there are wars everywhere. There is, 1 billion people sleep hungry every night. Kids don't have education. All of this stems from only one thing. Poor people remain poor for generations, right? How do we end that cycle? There's a cycle of poverty ends through education if they have a chance in life. If they don't even have a chance in life, how can they come out, right? They make so little money. They make less than $1 a day. They don't have roof over their head or no food on the table. They need education, and we help people through education, give them food and education to thrive. and you guys are all making a difference. Kathy, you made a massive difference. Brad, you as well. I'm super, like so many of you here. Dr. Sachin Mask is here. He's one of the early investors, one of the first investors in Evoke. I mean, Angelica. I mean, I see so many amazing faces. Roxy, and I can go Mutiat. All these, you guys are great people and really empowering others. Making a difference in others' lives, and helping those we never met. Imagine, like I was helped, I was served. And I always was, supported by my family and friends and my colleagues and my business partners. So I'm just returning this favor back to everybody. Paying it forward is always the right way to do it. Michael, you have a question, brother.
Hey, beautiful Mary. It's great to be here with you all. And that was a beautiful presentation. And I did come in late. One thing that I wanted to just share out of gratitude that, you know, in the uh, previous years, there's been resistance to money. And even the resistance of getting this workshop together is not a coincidence, Kathy. Working with energy, this is a very powerful topic because energy is currency. And embracing money is really embracing the sovereignty that money is a servant of, not the master of. The other thing that I would love to share is that when you were sharing about, the insurance policies and all that, I'm not too familiar, so I'm looking forward to diving into that some more. And also the beautiful heart that is presented here. Like I really love that how you approach service, and even when you were speaking. And one message I wanted to share that totally transformed and shifted Michael's perspective of like poor in richness is I heard a quote long ago, and it's by a beautiful soul named Doria, a beautiful avatar, and it's there is no such thing as poor people. There's only resourceful poor people, like people that don't have the resources. So when we
Sure.
look at beyond money, we see the veil beyond money, which money is important. We've actually embraced that more so than now. But resources is what you're offering, uh, Craig. Um, that when you offer people resources, it reawakens the inner resourcefulness, not just the outer, like, oh, I need this because I need to be happy. I need to find peace in this endeavor or whatever. And we see that that doesn't work because it just feeds the performer of personality. When we feed the resourcefulness, it feeds the soul of like the truth that's underneath us all. So I love that you brought a different in my perspective or Michael's perspective is that you brought a deeper, more clear awareness that with full vulnerability, we've been resisting and judging money for years, and we've taken money classes and financial classes. And when you put it in this way, I mean, we're not even talking about the 17th Amendment and all these different aspects that there's deeper levels of abundance. That when you talk about this, it brings more light that someone can open up to deeper levels of freedom, that we don't really have to work hard, we work intelligent. And hard work hijacks on intelligence, it piggybacks. So yeah, beautiful presentation. Thank you, Craig, for inviting me. I look forward to contributing, and I know we got a conversation very soon.
Yeah, yeah.
Love each and every single one of you. I don't know you, but thank you for the contribution, for rewriting your stories, and awakening the light that you are, because it's needed. And
Thank you.
the world is awakening, and it's great to be a part of it with all of you. Thank you.
Thank you. I appreciate that. So,
Thank you.
guys, I just want to say, one thing. How cool would it be? Like, I'm a very third grade type of mindset guy. I'm not a, super, I'm an ADHD dyslexic kid who grew up in my grandma and my uncle's home who took us in, and we really, really thrived on two things and two things only: kindness and gratitude. And that just sailed us through. And I know that this is the mantra to everything. And it's just very simple, like how cool would it be if you would do everyday activities and buy everyday products and do everyday things which you do anyway, and you use the marketplace and the gratitude token, and that token allows us to build water pumps somewhere that 2,000 people can be served with water, or it feeds a family and educates their children for 1 year with nothing. With $20 one child can be fed and educated for the whole year. Like, isn't this ridiculous? It's less than a drink at a bar. So I commend all you ambassadors. I commend people like Kathy, and I want to put like just say, you know what, guys, you guys are incredible because believing in such a concept and such a, of course, everybody wants to. You have to fill your jar first. You have to fill your cup first, and then overflow. But all of this can be done, along the way. We do small little things in our life, and we're buying a small gift for somebody to which we were going to do anyway. Mother's Day is coming up, might be buying something for mom or for your spouse or for your girlfriend, boyfriend, or kids, and that little money is impacting someone's life. How cool would that be? So that's why I designed Evoke and Elevate. All this concept and everything's merging into it, and gratitude token is taking place. But now today I don't have the time to go over how to scale your business, guys, but that is a very powerful course and tool that I will be giving you guys next time we're on the call. And stay tuned. You guys are very welcome to connect with each other. Really amazing people in these boxes. And Kathy, I want to thank you for giving such a soulful presentation. You talk from your heart, and you really mean everything you say, and I'm very happy that you're part of Elevate team. We just onboarded new, is Adrian here? I don't know if he's here. We just signed an agreement with Adrian for a chapter in San Diego, part of San Diego, but it's really beautiful, amazing guy also, and great human, great story, great success story. He's very successful himself. I can't wait to introduce all these people to you one by one, and then obviously can't wait to meet you guys in person at our next big event coming up sometime later this year. We'll make an announcement. So, without any further ado, I think this is it. We're over time today, but thank you all for being in this call, and thank you for taking the time today, coming and joining us. Don't hesitate to reach out to our teams. Reach out to Kathy personally. Her information is in the chat. And yeah, you guys are amazing. Thank you for being and making a difference. And Mutiat, I think it's pretty late for you now for dinner time and wherever else people are tuned in from. I appreciate you guys, and connect with our community, connect with our people. Join our free community if you haven't joined already. Can someone put a link in there? I think it's shoot. Okay, here we go. I'll send somebody. There it is. Are you guys, is everybody, I think most of you are part of this, but if not, here I can drop the chat. It's by invite only. It's free, but by invite only. Somebody has to sponsor you. So if you see this link, put either my name or Kathy's name. If Kathy invited you to this call, or if I invited you, just join this community. It's a small 300 plus people in there, but it's really vetted people, really cool people that come in, and we kind of have a small little three questions you have to answer, and you have to treat people with kindness and gratitude, and always respect others. It's a safe place to discuss things, if you will. So, okay, thank you guys. Appreciate all of you. Anthony, thanks, brother, staying on the call. Michael, Roxy, Samuel, Stefan, everyone, each one of you. Thank you so much. Angelica, look forward to connecting with you. Angel, ciao, 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 guys. Kathy, talk soon, okay? We'll circle
Bye.
back. Ciao.
Bye.
Bye.